Like a lot of the drivers of this is the unknown. It's the uncertainty that drives the market. It's not because we have knowledge of in 4 weeks where is the virus going to be at. It's because we don't know that causes the market to drop. And so people are honestly scared right now.
Chris Burns, so great to have you on American Thought Leaders.
Yeah, thank you. I appreciate it. And the fist bump.
Yeah. And the fist bump again, because we know that coronavirus is around and it's growing sadly. And frankly, just as we were talking offline, it seems like it's having a pretty profound impact on the markets right now. I mean, tell me a bit more about what you're seeing.
Yeah, it's been significant. So most people today, if they're reading any sort of news, are seeing it's another day that the market is down significantly. And at this point, it's the fastest drop in the market that we've seen since 2008. So if things continue on today, which we don't know in the next half hour, and the trajectory they've been going, we'll be in what's called correction territory, which just means a 10% drop from the most recent high. Now, to move out of the bull market, which is the longest bull market in history that we're in right now, that's a 20% drop. So we're still a good ways from that. But because it's been so fast, people are terrified. So I'm getting emails from clients that are just saying, I can't afford to lose all my hard-earned money. Should we be going to bonds? Should we be going to safety? What do we do? And I think it's hard when you also see politically, politicians coming out and saying it's going to be fine, everything's okay. But that doesn't really impact the market per se. Like a lot of the drivers of this is the unknown. It's the uncertainty that drives the market. It's not because we have knowledge of in 4 weeks where is the virus going to be at. It's because we don't know that causes the market to drop. And so people are honestly scared right now.
Well, and to be honest, they're right to be. I don't know if they're right to be doing what they're doing with their money.
Sure.
That's your domain, but they're right to be. Because we don't know what's happening in China. This is something the Epoch Times covers extensively, and coronavirus especially recently.
Sure.
And we know it's a much bigger thing than the official numbers in China say. And I guess the word has gotten out.
Right. And that's the thing about the market is, if you think about it, it's literally, it's not like a college professor that's sitting and weighing out papers and logic and going, well, this seems like it makes sense. It's a group mentality, right? It's more like my 4-year-old, literally, where if I'm chasing her, she might dart in one direction or the other, and I never quite know where she's going to go. I mean, the market is similar to that. It doesn't always make a lot of sense. So if it's scared, if you have uncertainty, especially when, like you said, we really don't know if the numbers we receive from China are all realistic, and we're only starting to see the impact outside of that. So people are right to go, this is uncertain. But the problem is that the response then is reactivity. Like as humans, we are built for certainty. I want to know, what should I do? What's going to happen? And when we sit in that tension of not knowing, it causes us to go, well, then I'm going to create certainty. And the easiest way to create it is, in this case, I'm going to go to safety. I'm going to take all my money. I'm going to go to bonds. And it may be for a lot of people, they do need to make adjustments to their portfolio, but counterintuitively, it's not because of the coronavirus, and it's not because we see the markets dropping. It's because they need to get out of the cycle of reactivity. So they need to say, okay, wait a minute, aside from all this, even if the market was up 10% today, how am I invested based on my proximity to retirement? And if I'm 65 years old, as a client who came in recently was, with 98% equity exposure, so they're 98% of their portfolio is in stocks, right? Then when the market drops, which is going to happen inevitably, that could be ruinous to my retirement. So I need to make the change to be more conservative, but again, not because the market's up or down, because I need to find a risk tolerance I can stick with. So my biggest advice to people is don't waste this week. Hopefully this is not the big drop we've all been worried about over time, but even if it is, don't waste this. If you feel concerned right now, look at your portfolio and go, what is actually the realistic amount of risk I can handle, even if the market was up?
This is actually fantastic advice, really, right? Because
I appreciate it.
No, I mean it makes a ton of sense. We see a potentially bad situation, but if it's deeply concerning to you, if you're wondering if you're going to be ruined, you probably haven't invested very smartly. I mean, that's basically what you're telling me, right?
Or,
Yeah.
honestly, it makes sense because think about, we're in the longest bull market in history, and interest rates are so low that people that are normally would be going to safer money options, people that are closer to retirement, they're not getting any return on that. So there's a temptation to edge more and more into stocks because that's where the return is.
Yeah.
We're coming off a year with over 30% gain in the S&P 500, and people go, you know what, maybe I am pretty good at this investing thing. For the last 5-6 years, I've been killing it, right? But your golden retriever would have been killing it because the market's been up. We forget so quickly how volatility happens. So the key is just get off that cycle. Because once you find a risk you can stick with, then when the market's up, you sit and go, you know what? I don't have to worry it's going to drop because I'm already ready for it. And when the market's down, I already know I've moved to a position that's safe enough that it won't wreck my portfolio. So then you have so much less anxiety while everybody else around you is sprinting and worrying and trying to figure out what to do.
So I think with do you invest in crypto and this kind of thing?
A little bit. In my mind,
just reminded me of hodling, as they right.
Yeah, I mean, in my mind, cryptocurrency is very similar to any other asset where you go. I believe in massive diversification, and so having some exposure to that is fine. Putting a lot of your money into any one thing, and I don't look at Bitcoin as like, well, that's the bad thing.
Right.
If you said I'm going to put most of my money into Coke stock, I would say that's not a good play. Far better to be massively diversified. So having some exposure, that's great. Putting a lot of money into any one thing, that can lead you to trouble.
Okay, so you're giving us a kind of a prescription here. Use, if we can call, this isn't a crisis yet, but it's definitely getting a lot of people thinking from what you're seeing on your phone.
Yes, very much so.
Yeah. What do you expect will happen based on what you know in
here's
the coming week?
Annoying answer, okay?
Right.
In terms of what's going to happen to the markets, I have no idea. And here's the problem. No one does. So everyone you see writing op-eds on this, everyone you see coming out and going, this is what could happen if we have a global pandemic, right? There's all this discussion, but the reality is no one 2 months ago was saying, you know what, watch out, we could have a major virus come out of China. I'm old enough to remember like 4 weeks ago when it was, what if we have World War III with Iran? And then 4 weeks before that, what if we don't have a China phase 1 trade deal? And that was all very concerning, right? So if it's this that causes that major drop, the key is, again, are you ready for it from a risk perspective? If it's not this, which it very well might not be, we might have all forgotten about this in 2 months, something else we wouldn't expect today will come along. And so the key here is, and even the head of the IMF, the International Monetary Fund, just came out and said, look, we truly don't have enough information to make any predictions here. So predictions are normally driven by the media in order to create ratings, which is fine, but they cause anxiety. And that anxiety actually can be very detrimental because if I go make a decision based on that, it could truly hurt my long-term portfolio. So best advice is, again, get off the treadmill, look at where am I at in proximity to retirement, what level of risk can I handle, and then if this is the big drop, you'll be in better shape than you were, and if it's not, you'll be so much more peaceful about the future.
So you're not panicking right now, is that what you're telling me?
I'm not panicking because I've gone through this. Like, people ask me, what are you most worried about? Honestly, I'm most worried about people that are close to retirement who have not gone through this process. Because if you're close to retirement right now, and again, you've, without even really thinking about it, you've kept a much higher exposure to stocks, to equities, because the market's been doing so great, then you're the one at risk right now of going, wow, a major drop could truly change the next 20 to 30 years for me. Right. I had a client who was retiring, he wasn't my client back then, but he is now. In 2007, he had plenty of money, but he was a very aggressive investor, and his advisor told him, you know what, you're fine, just stick with it. And a few months later, he lost 40% of his portfolio. By the time I met him, it was years later, he was still working. He had to go back to work and was trying to re-retire because of just bad advice in that moment.
Wow.
But another thing to remember is because we're sitting on almost 500% growth over the last 10 years, as scary as a 10% drop within a week is, you're still up 490%. So making an adjustment right now to a healthy safety level, you're still in pretty darn good shape versus going, I'm going to run for the hills, I'm going to take a big loss, and then by the time I get back in, I'm going to pay even more to get back in when things are coming back up. Get off that cycle. That will only hurt your portfolio.
Chris Burns, such a pleasure to have you.
Yeah, thank you so much. We'll fist pump again. I really appreciate you letting me come on.